माननीय प्रधानमंत्री जी को आमंत्रित करते हैं IFSC हेडक्वार्टर्स भवन का शिलान्यास करें। NSE IFSC SGX कनेक्ट का लॉन्च करें। IIBX का लॉन्च करें।
IFSC एक एनेबलर भी बनेगा, इनोवेशन को सपोर्ट करेगा और इस सब के साथ ग्रोथ अपॉर्चुनिटीज के लिए एक कैटालिस्ट का काम भी करेगा। अनेक महत्वपूर्ण पड़ावों को आज हमने पार किया है। इनसे 130 करोड़ देशवासियों के सामर्थ्य को आधुनिक वैश्विक अर्थव्यवस्था से जुड़ने में और मदद मिलेगी।
Gift City today is recognized by the Global Finances Cities or Global Financial Centers Index, which is something which is located in London, recognizes global financial centers in funds, venture capitalists, private equity funds, or hedge funds. All of them are looking at this jurisdiction for pooling of global funds that can be invested in India.
Hello and welcome to this special program. It is natural that financial market participants are focused on how markets are here and now. While this is well and good, we must also work towards developing new financial infrastructure as the country looks ahead. This program is an attempt to throw some light on one such effort. I'm talking about the Gift City and the International Financial Services Centre, which is present there. Now, Prime Minister Narendra Modi, back in 2007, as Chief Minister of Gujarat, conceptualized the idea of the Gift City, and the vision was to create a financial centre that can compete with the likes of London, Tokyo, Shanghai, etc. The place is spread over 886 acres in Gandhinagar, and it consists of a multi-service SEZ, which houses India's first International Financial Services Centre, IFSC, and an exclusive domestic tariff area, a DTA. Let's talk about the IFSC itself, that is the International Financial Services Centre. Well, simply put, an IFSC caters to customers outside the jurisdiction of the domestic economy. Such centres deal with flows of finance, financial products and services across borders. London, New York, Singapore, and a few others can be counted as global financial centres, and now GIFT IFSC is aiming to be one among them. In recent events, the Prime Minister inaugurated the India International Bullion Exchange, the IIBX, and the NSE IFSC SGX Connect. That's a connect between both the stock exchanges. Since the IFSC is a place which operates by specially designed rules, it needs a separate regulator as well. So the government in 2019 established the International Financial Services Centres Authority, the IFSCA, which is a unified regulator for IFSCs in India. IFSCA, the regulator, lays down the rules, and it assumed the powers of 4 domestic sectoral regulators, namely the RBI, SEBI, IRDAI, and the PFRDA. I caught up with the chairperson of IFSCA, Mr. Injeti Srinivas, recently, and began by asking him on the efforts to develop the Gift City as a global financial centre and the kind of players that are now calling the centre their home.
With respect to how it is developing, it has developed in a phased manner. 2015, actually, the IFSC at GIFT was operationalized. And from 2015 to October 2020, it was being managed by the domestic regulators, the 4 domestic regulators. So what you had was the enabling framework, which was put in place by the domestic regulators. It is in October 2020 that the IFSCA was established as a unified regulator, and it took over the development and regulation of the IFSC. In the last 2 years, there has been a significant growth in the IFSC, Just to illustrate, in the banking sector, prior to October 2020, we had only one foreign bank, and today you have 8 foreign banks, and you have 22 banks here with a combined balance sheet of 35 billion USD, which was around 14 billion USD when the IFSC was set up. So there is a exponential growth. Similar experience has been in other sectors like the funds, alternative investment funds. These are growing very rapidly. The 2 international exchanges here, they are also, the volumes are growing quite rapidly. So in the last 2 years, the IFSC has made rapid strides, which is based on the strong foundation which was set up by the domestic regulators way back in 2015.
Say Bank X, which has a presence in India, has got an Indian entity operating and sort of offering services. When we say that bank has set up at IFSC, just the mechanics of it.
Okay.
Yeah, and what is the need to be present in IFSC, and what can it do operating out of the IFSC, which it cannot do otherwise in other parts of the country? Yes.
Okay. So again, here I would say that conceptually you look at it as India as one country has 2 financial systems. So one is the domestic financial system and one is the international financial system. And the international financial system is operative in the IFSC. Just as we have 200 odd special economic zones, we have one international financial services center. So it's a very unique platform where you are effectively treated as an offshore jurisdiction. So when, let us say, State Bank of India opens a branch in New York, it is guided by the regulatory framework of the Fed. And it has all those opportunities, business opportunities, which are available internationally. Similarly, when State Bank of India opens a branch here, it is like an overseas branch of State Bank of India, and they enjoy all the benefits and facilities which they enjoy at other offshore jurisdictions. Let me again put it in perspective in terms of the special benefits which banks get here. For example, look at HSBC. HSBC has been present in India for over 150 years. It has been set up here 1.5 years back. Today, it has a balance sheet of 3.5 USD, which is 20% of its India balance sheet built over 150 years. So in other words, they could build a balance sheet of this size in 1% of the time, which 1% of the time they could build 20% of the business they have built in the domestic area. Being here, they can lend to the domestic economy. It will be like ECB. They can provide trade finance. We also allow things like aircraft leasing. We allow activities like acquisition finance, which are not available to the banks in the domestic area. So one is that they have the international environment. They have the benefit of full convertibility. They can access the Indian market just as they access it from Singapore or Hong Kong. They have cost advantage. They have the advantage of a unified regulator and regulations which are globally aligned.
So that example that you gave, I think that's very useful and very well explained. HSBC in IFSC is not HSBC India, but it's an offshore entity operating. And when an Indian corporate goes to borrow money overseas and sort of arranges loans through HSBC and goes to London, etc., New York or wherever, it can do that here in IFSC via the HSBC entity at the same terms, right?
Not only that, for example, many of these banks, foreign banks, they also invest through FPIs. So much of HSBC's investments into the Indian capital market was being channelized through the Singapore branch. Now that is gradually migrating to the unit they have set up in the GIFT IFSC. So you are in a way encouraging India-centric business to re-domicile to GIFT rather than being conducted from offshore jurisdictions like Singapore or Hong Kong or Mauritius.
Are taxation regulations, etc., all now globally aligned, or is that still work in progress?
So see this. This we'll have to understand that as far as the Indian Income Tax Act is concerned, the entities here are domestic entities. So whatever tax regime is applicable in the domestic area is applicable here unless a carve-out has been given. And in that context, to be competitive with other offshore jurisdictions, GIFT units enjoy a tax holiday of 10 years over a 15-year period. So that is a great advantage they have. Second, there are some special carve-outs. For example, if you want to invest in as a non-resident in the Indian capital market, if you come through the domestic gateway, you will have to have your PAN and you will have to file annual returns. Whereas if you invest it through the GIFT jurisdiction, you don't have to have a PAN and you don't have to file annual returns. So there are simplified procedures to that extent. And for non-residents, especially individuals, it becomes much more easier to access the Indian capital market. It also offers similar advantages to residents. For example, now if a resident wants to invest in foreign securities, they can use the GIFT platform. At present, you don't have foreign companies listing in the GIFT because it's still early days. But recently, a very innovative product was listed in the NSE IFSC, which is unsponsored depository receipts of American securities. These are tokenized receipts which are issued here, and it is in the depository, international depository here, and traded on the exchange. So, and tokenized because some of these foreign securities, they are very expensive. They could be $2,000 per share. Now that can be fractionalized into 100 units. So you democratize the ownership of foreign securities. A lot of residents can also then invest in foreign securities and have better control, because it's just like investing in the Indian stock market. You will have complete information of what is the stock price, and you can buy, you can sell. So those advantages also are there. So on the retail side and on the institutional side, on both sides, a lot of opportunities will open up.
Apart from the regulations and the tax codes and the physical infrastructure, there is also, these are also by themselves great cities. Is that also a focus area to develop this place as, in terms of just the social setting? What is being done in that regard, if you can outline for us?
Yeah, that's important, but you'll have to look at it from a different perspective. If you look at a financial center, I'm not talking about New York and London, but if you're talking about a financial center like, say, Dubai, then there's a lot of focus on lifestyle and all the infrastructure and everything, because they want global business to gravitate to Dubai. There is no domestic economy per se where those players will be interested in operating. But when it comes to India or China, for that matter, the real attraction is the market, the domestic market, and the potential there. So infrastructure of that nature, of that quality, is a secondary requirement. But having said that, I don't know if you have visited the GIFT City. It is truly international standard, and it is very impressive, and it is growing rapidly. In the first 10 years, the GIFT City authorities had sold 10 million square feet of development rights, and in the last 1 year, they have sold 11 million square feet of development rights. So it shows that there is traction, and the real estate market is very upbeat. And I'm sure it will not long before international players in the retail business will also be looking at gift very intently.
Well, that was the IFSCA chief, but the gift city in Gandhinagar balances itself to two important pillars. We'll tell you all about that on the other side of this quick commercial break. Welcome back to this special program. We are focusing on the International Financial Services Centre in Gift City, Gandhinagar. Let's go across to my colleague Yash Jain, who is joining me right now. Yash was at the inauguration in Gandhinagar on the 29th of July. Recently, he's been following the developments there pretty closely. Yash, tell us, what are some of the important pillars of the Gift City?
Prime Minister Narendra Modi's visit to the Gift City was a big move in giving the Gift City the identity of being a gateway to the global financial capital. This identity of Gift City balances itself on two important pillars. The first one is the NSE IFSC SGX Connect, and the second one is the India International Bullion Exchange, or more popularly called IIBX. Well, through NSE IFSC SGX Connect, order on Nifty derivatives placed by members of SGX will be routed to, matched and settled at the NSE IFSC. Essentially, the road to Singapore will go through Gandhinagar. The NSE IFSC SGX Connect will cover popular products like Nifty 50, Nifty Bank, Nifty IT and Nifty Financial Services, and the exchange is expected to deepen the derivative market at GIFT IFSC. What's the big goal? The average daily volume in Nifty futures at SGX is approximately 109,000 contracts worth $3.65 billion. The goal is to transition these volumes from SGX to the NSE IFSC. Another important initiative was the launch of India International Bullion Exchange, or IIBX. It's only the third exchange of its kind in the world. The purpose is to allow qualified jewelers to import gold directly using the exchange mechanism. Essentially, financialization of gold. The exchange will aid efficient price discovery and ensure standardization of quality assurance and integrated sources of the yellow metal. What's the big goal here? It is to make India, which is the second largest consumer of gold, to be able to command the global gold prices. Prime Minister Modi also laid the foundation stone for the International Financial Services Centres Authority, or IFSCA. It's the headquarters for the International Financial Services Regulator. That's not all that Gift City's got. A new development bank has also set up its Indian regional office. Also, international banks like Deutsche Bank, JP Morgan Chase and MUFG Bank have set up their units in the Gift City. All in all, about 200 companies, domestic as well as international, are expected to set up their shops in the financial powerhouse called the Gift City.
Yash, thanks very much for that. So lots of interest there in the city, lots of companies making Gift City their home. Now, another thing which Yash referred to is one of the important components of the Gift City at Gandhinagar is the IIBX, or the India International Bullion Exchange, the first of its kind in India and only the third such exchange in the world. We caught up with the Managing Director and CEO, Ashok Gautam, who said that this exchange will help bring about efficiencies of scale and better price discovery for gold. Listen in.
Presently, we are working with 9 a.m. to 3:30 p.m. But we are actively engaged with the market participants as well as with the regulator. Hopefully we will increase it to maybe 5:30 or so. We'll let you know once those approvals come. We are an alternative channel and we want to bring in the efficiencies of scale. We believe that more and more suppliers will come in and there'll be a better price discovery for the gold, and consumers, the qualified jewelers and the end consumers will certainly benefit because of these economies of scale, and they will get a better price. Price which our qualified jewelers or the buyers and sellers will be putting, or the buyers will be getting, will be the price which will be inclusive of this premium. But we believe that today, because of the consignment model, which is largely prevalent in India, there is a 30-day consignment cost built in. And these are scattered players who are trying to arrive at a lot size on which the gold can come in India. But we believe that the suppliers, when they have exchange as a center point, and they can have access to large number or some of the biggest names in the industry as their buyers. They will be able to pass on many of these benefits to the end clients by giving a sharper price on the exchange. And as there will be multiple sellers and multiple buyers, it will be a process of price discovery. And in a transparent manner, that price will be available for everyone to import or to trade.
Well, TCS implemented the IT infrastructure required to run the trading and settlement at NSE, IFSC, SGX Connect. And JP Morgan brought gold in the walls of Gift Exchange for the first transaction at the India International Bullion Exchange. CNBC-TV18 spoke to heads of both companies. Listen in to their views.
Lots of testing. We have very strong redundancy built in for this platform. And it's not, you have to plan for the fact that there could be an outage and how you will recover in a matter of minutes or less. And that needs a lot of testing. We are doing that. We also need to, take care of the performance between the production and the DR sites. So I think we are on top of that. It's a matter of continuously improving on it because technology keeps improving. We need to keep pace and we need to be able to recover quickly. That's the way to be prepared.
Now you have an exchange which gives you a guaranteed settlement mechanism. So for international players to be able to trade with confidence without having to use banks and all the frictional costs that come with it, the efficiency and the liquidity of an exchange is what comes in. Correct. We've already brought gold into the vaults here in SGX.
Well, that brings us to a wrap on this special program, but we leave you with a promise that we will keep getting you all the updates on this emerging global financial hub, Gift City. Keep watching CNBC TV 18 for more news and updates.